Good afternoon. Welcome to the Monetary Policy Stance Press Briefing. Let us welcome the following: Monetary Board Chairman and Bangko Sentral ng Pilipinas Governor, Governor Ellie M. Remolona Jr., Deputy Governor Francisco G. Daquila Jr. of the Monetary and Economic Sector, Senior Assistant Governor Iluminada T. Sicat of the Monetary Policy Subsector, and Managing Director Zeno Ronald R. Abenoja of the Department of Economic Research. Governor Remolona will now deliver the statement on the monetary policy decision. Governor?
At its monetary policy meeting today, the Monetary Board decided to reduce the BSP's target reverse repurchase rate by 25 basis points to 6.25%. The interest rates on the overnight deposit and lending facilities were accordingly adjusted to 5.75% and 6.75% respectively. Headline inflation is projected to trend downward to within the government's 2 to 4% target range, despite the uptick in July. The risk-adjusted inflation forecast for 2024 and 2025 now stand at 3.3% and 2.9%, respectively. Meanwhile, the risk-adjusted forecast for 2026 is 3.3%. This outlook is supported by well-anchored inflation expectations over the policy horizon. The balance of risks to the inflation outlook continues to lean toward the downside for 2024 and 2025, with a modest tilt to the upside for 2026. The downside risks are linked mainly to lower import tariffs on rice, while upside risks could come from electricity rates and external factors. The Monetary Board also expects domestic demand prospects to hold firm. Despite tight financial conditions, second quarter GDP growth has been solid and the unemployment rate has declined. Public investment, alongside easing price pressures and robust employment conditions, are expected to support economic activity. With inflation on a target-consistent path, the current macroeconomic outlook supports a calibrated shift to a less restrictive monetary policy stance. Nonetheless, monetary authorities remain mindful of lingering upside risks to prices. Going forward, the Monetary Board will continue to take a measured approach in ensuring price stability conducive to balanced and sustainable growth of the economy and employment. Thank you.
Thank you, Governor. At this point, we would like to request Deputy Governor Daquila to share with us the BSP's inflation forecast for 2024, 2025, and 2026.
Thank you, Alicia. As mentioned in the press statement, we see headline inflation trending downward and settling within the 2 to 4% target range in 2024 to 2026. The risk-adjusted inflation forecasts for 2024 and 2025 now stand at 3.3% and 2.9% respectively. Meanwhile, and this is the first time that we're releasing this information, the risk-adjusted inflation forecast is 3.3% for 2026. For comparison, in the previous Monetary Board meeting on policy held on the 27th of June, the risk-adjusted forecast for 2024 was at 3.1%. So this represents a slight upward adjustment to 3.3%, and that is largely because of the carryover from the uptick in July inflation due to higher electricity rates and fuel prices. But for 2025, there is a downward adjustment of the risk-adjusted forecast from 3% previously to 2.9%. Again, as mentioned in the policy statement, the balance of risks continue to lean towards the downside for both 2024 and 2025. But on the other hand, there's a modest tilt to the upside for 2026. Again, the main reasons for this are on the downside risks. These are mainly due to lower import tariffs on rice. And the lower tariff is expected to reduce upward pressure on domestic rice prices through higher import volumes, similar to the country's experience following the passage of the rice tariffication law. On the upside risks, the main factors behind this would be through possibly higher electricity rates and also through external factors. On electricity, we're looking at the impact of the Supreme Court nullification of the ERC's 2014 decision to cap WSM prices. And on external factors, of course, there's always the uncertainty coming from geopolitical risks, mostly from the Middle East and also from Ukraine, which could impact global oil and food prices. Thank you.
Thank you, DG Dakila. We now proceed to questions from the press and market analysts. This will be the order of questions. First, questions from our BSP Press Corps. Next, questions sent in advance by analysts and reporters. And third, additional online questions. So we will begin with reporters who are here today. Reminder, please raise your hand and wait for the microphone to be handed to you. Kindly state your name and your media organization before asking your question. Question.
Hi, good afternoon. This is Kisha Taasan from the Philippine Star. Governor, do you expect demand to slow down in the coming quarters, given that private consumption eased to its slowest level in 3 years based on the second quarter GDP data?
No, actually, that's the reason for the easing. We're somewhat more confident in the inflation numbers coming down than in the GDP numbers going up. As you mentioned, as you suggested, the main factor behind the 6.3% GDP number in Q2 was construction was the strongest, and then public spending was also strong. Consumption was relatively weak. So it doesn't look like something that could easily be sustained. And so that we went for a cut, partly because of that.
So, Governor, do you expect slower private consumption to slow down in the coming quarters? And how would this affect monetary policy? Are we going to expect more rate cuts for this year?
I think it was slow enough, Francis. We actually expected to get somewhat stronger. Is that right, Francis?
Governor, as we had observed during the actually in the previous meetings when we were looking at the results from the GDP numbers, construction was very strong at more than 16%. Government spending was also very strong at double-digit levels. However, consumption was a little bit slower than the trend. This is also to be expected because you can see that with the higher prices that we have experienced, that would be a negative on the purchasing power of consumers. And also, the previous monetary tightening would be expected to have its impact on consumption spending. But as also some mitigating factors going forward, as inflation continues to moderate and go back to within the target range, then that should provide an impetus to consumption spending. But for the near term, we're still expecting that we would be operating at a negative output gap. And that gap, however, will go smaller as we go further into the policy horizon.
Thank you, TG. Any more questions?
Hello, good afternoon, Governor. Luisa Hoxon from Business World. Governor, you had previously mentioned you were seeing up to 50 basis points worth of cuts for the year. Now that we've cut rates by 25 beeps, are you seeing another cut in either your October or December meeting, or is there a possibility of an even bigger size than the 50 basis points? Thank you.
I have only one vote on the monetary board, but my views have been consistent with a 25 basis point cut today and another 25 basis points sometime during the year, either in October or December. And then we'll see what happens in 2025. By the way, the most relevant policy horizon for us is actually 2025 when looking at inflation, because there are long lags in the transmission mechanism of monetary policy. So the decision we made today will mainly affect 2025.
Thank you, Luisa.
Good afternoon, Mike Arceo from Manila Times. I just would like to know po yung baseline forecast for this year in 2025 and in 2026 po. And another question po for Governor. Since the Philippine currency already appreciated and at the 56 level, how do you think this will impact your monetary policy decisions in the coming meetings? And if the Fed cut in September, how this will also affect your monetary policy stance? Thank you.
I will turn to Francis for the baseline forecast. But in terms of the exchange rate, we don't have a target for the exchange rate. We know that it's appreciated recently. And when it depreciates, we worry about the pass-through from the depreciation. The pass-through turns out to be quite small, so it's not the main factor in our calculations. But there is something of a pass-through. A sharp enough depreciation could affect inflation.
Thank you, Governor. On the baseline forecasts, the past actually follows pretty much the shape of the risk-adjusted forecasts. So for this meeting for 2024, the baseline is at 3.4%, a little higher than the 3.3% that we had in June. For 2025, it's lower from 3.2% previously. It's now down to 3.1%. And then for 2026, we're looking at a baseline of 3.2%. If you can note, if you compare the baseline forecasts with the risk-adjusted forecast, so for now, I'll mention the baseline, it's 3.4 again. The risk-adjusted forecast is at 3.3. So this is in contrast to what we had when inflation was still on the way up, when the risk-adjusted forecast was higher than the baseline. Also, for 2025, the baseline is at 3.1%. The risk-adjusted forecast is at 2.9%. And for 2026, the baseline is at 3.2%. The risk-adjusted forecast is at 3.3%. So you can see that there's a shift. The risk-adjusted for 2026 is a little bit higher than the baseline, in contrast to 2024 and 2025. That is what we mean when the balance of risks are shifted to the downside for 2024 and 25, and a little bit to the upside for 2026. The main reason being that the downside risk is coming from the lower import tariffs on rice. And much of the impact of that will be on 2024 and 25, because that's where the adjustment comes in. And then the impact will dissipate in 2026.
Thank you for that question. Any more questions?
Hi, Gov. You said in your statement that
Your
you...
name, please.
Andrew Calonzo from Bloomberg News. Sir, you mentioned in your statement that you are looking at a calibrated shift to a less restrictive monetary policy stance and also a measured approach in price stability. Could you please elaborate on that? And how will this affect the policy rate path, perhaps next year?
To be honest, to me, calibrated and measured mean the same thing. But we have a good writer on the monetary board, and he suggested we use measured for the next sentence. But thank you for that suggestion, MBM Romy. Did that answer your question?
Not yet, Gov. I mean, could you please, could you probably elaborate how that will, I mean, what does calibrated mean? What does the calibrated shift mean?
To me, it means we're moving along the path that we expected. There's no bad surprise. There's no good surprise. There's no expectation of a hard landing. It's kind of where we thought we would go.
Last, Gov, the Fed, this is a follow-up to Luis's question. The Fed is widely expected to cut next month. So how will that October? So will you match that if they cut?
We expect the Fed to cut by September, possibly 50 basis points in September, and then 100 basis points until the end of 2024, and then maybe another 125 basis points in 2025. For us, that's data. That's one of the data points we look at. It doesn't drive our monetary policy. It's just one of the numbers that we consider in our decisions about monetary policy.
That's a bigger than the cut that we did with the 25, and then you expect the Fed to cut by 50. So how will that affect your October decision?
For October, that will mean wider differential. You know, the FOMC policy rate is below our policy rate, but if they cut by more than we do, then the differential will be even wider. That may exert pressure on the peso a little bit, but given that the peso has been appreciating already, it's not a big deal.
Thank you, Governor. Okay.
Good afternoon. I'm Kai Ordinario from Business Mirror. I just wanted to ask, since you already cut rates, do you already have an idea of when you will also cut RRR? And then, since you already cut rates, does this mean that an off-cycle policy adjustment is no longer on the table for the monetary board? Also, for a bit of background, we want to know, is this the first time that the MB cut ahead of the federal US Fed? Thank you.
Is it the first time we got ahead of them? I don't know. I actually haven't been keeping track of their, but we will check. We'll look. Maybe it's the first time. What was the other question? What was the reserve requirement? We haven't discussed it in the monetary board, but I will raise it in one of the next few meetings. I think we should reduce the reserve requirement quite substantially. Right now, it's at a ridiculous level. It's 9.5%. It needs to go down substantially, but we haven't made any decision of when to do it. We will do it, but we don't know when.
Thank you,
Off
Gov.
cycle, we avoid off cycle decisions as much as we can. Off cycle decisions are either you think you fell behind the curve or you think you're facing a hard landing. Otherwise, we avoid off cycle decisions.
Thank you, Gov.
Ditas Lopez from Bloomberg News. Gov, what could derail the central bank from its monetary policy easing? Is there any factor that could derail it, or would you say that the country is already out of the woods when it comes to inflation? Thank you.
Nothing that we see on the horizon. Of course, there could be bad tensions in the Middle East, in the South China Sea. There could be an unexpected recession in the global economy. Things like that could derail the path that we're looking at. But I don't see anything specific on the horizon. Francis, are you anything that scares you?
Just to note, Governor, that there's been quite a shift in the shape of the fund chart that we've been looking at, whereas it was significantly tilted to the upside before. Now it's much more symmetric, and actually there's a slight shift to the downside tilt for this year and for next year. So that actually means that we have a far more favorable environment on inflation now.
Thank you, DG. And more. Yes.
Governor, how will the 25 basis point cut help shore up the economy, or how will it support the economy?
So it will make, we hope, make lending rates lower, make credit easier, and that has side effects on consumption, on investment, and so on. So it's one move. We may need further moves in the same direction, but we'll see.
Thank you, Gov. Yes.
Hi, Gov. Ian Sigurd from the Philippine Daily Inquirer. So, sir, since you mentioned that there's no expectation of a hard landing and that the BSP supports a calibrated shift to a less restrictive monetary policy, does that mean that we can expect a gradual easing cycle?
I think that's what we're trying to convey. It's going to be gradual. We didn't like the word gradual somehow in our meeting. The initial wording was gradual, and then we decided to change it to a more nerdy word like measured.
Thank you, Gov.
Hi, Gov, good afternoon. Mikael Flores of Reuters. Sir, in terms of you mentioned you prefer a calibrated shift, no? Or a gradual easing. So I was wondering if a 75 basis point cut for the year, we have 25 now, is that out of the table already? So should the market just expect just one more rate cut for the year, or is there space for a 50 basis points cut?
Something pretty bad has to happen, I think, for us to do 75 basis points, a cut of 75 basis points.
So just a follow-up. No? If you look at the second quarter data, consumption actually contracted seasonally. So how big of a concern was that in the BSP's view? And
Consumption is the biggest part of
Yes.
of GDP. Maybe 70%, no, Francis? 67%. So a slowdown in consumption is a big slowdown. It didn't actually slow down in the Q2 numbers. It went up
4.6%. But if you look at the
4.6%. But in the strength of GDP, the GDP number was 6.3%. So the strength of it came from construction and public spending.
that's on my end goal, because if you look at the government growth target next year, it's higher by 6.5 to 7.5. Do you think the level of policy settings that we have now, is that enough to support the growth goals of the national government? I understand BSP is inflation targeting, but the level of rate could
Yes,
also.
I do think it can support the achievement of the government's growth target. I think it will fall within the range. As you know, the target is a range.
Thank you, Mika. Yes.
Good afternoon. Patricia Chu of The Asset. Sir, as a follow-up lang to your comments on the reserve requirement, I just wanted to ask, is there a possibility that the current RRR will be reduced specifically for banks who will be willing to bring down their transfer fees to zero as an incentive?
Sorry, can you repeat the last part of the question?
Is there a possibility to bring down the reserve requirement for lenders specifically who will bring down their interbank transfer fees to zero as an incentive?
I would prefer that the reserve requirement not be used for that purpose. We have other tools for that. I think the reserve requirement should be the same for the deposit-like liabilities, for deposit and deposit-like liabilities. And I would prefer that it were uniform across those different liabilities.
Thank you, Gov. Are there any more questions? So we would like to acknowledge questions from Michael Ricafort of RCBC regarding the direction of local policy rate cuts for 2025 and 2026. This was replied to earlier by the governor. Same for a question on possible reserve requirement rate cuts. So I'll move on to a question from Emmanuel Lopez of UST Graduate School. He asked, considering that inflation rate has breached the 4% mark, don't you think it's a little premature to bring down rates because it might send the wrong signal to the local economy?
Can I answer this and then leave? Is that okay? So the inflation rate for July was 4.4%. If you remove the base effects, you get down to 4.1. So it still breaches the target range. But 4.1 and 4.4, including the base effects, were entirely expected by our calculations. So it wasn't a surprise. And in the same manner, we expect inflation rate to be well within the target range for the August number and September number. So we we think we are still justified in reducing the target, the policy rate.
Thank you, Governor. Are there any more additional questions from the floor? Okay, so since there are no more questions, we would like to thank everyone for the time and attention this afternoon, including those watching us live on our Facebook. This ends our monetary policy press briefing. Maraming salamat po. Thank you, Gov. Thank you, Gov.